All right, y'all. So now that you have a thorough understanding of trapped traders and how CVD divergences work, we're going to be going more in depth, and we're going to be talking about the two different types of CVD divergences that I personally trade. Okay, so there are two types of divergences when it comes to CVD that we will discuss today. The first one is lack of market participation. The second one is called absorption. Now, absorption is the type of divergence that we've already discussed in the last session, right? Because what's happening with absorption is those limit traders who are sitting here are absorbing the market traders who are marketing in. So if we have a downtrend and we have a lot of people, these red lines represent people market shorting, okay? And then we have the limit long down here. The reason why the price doesn't come any lower, even though there are many market shorts opening up, is because price is being absorbed. Those limit shorts, that money is literally being absorbed by the limit long. You can think of the limit order as a sponge and the market orders as water. And the market shorts are literally taking an eyedropper, and they're dripping drops of water into this limit order, which is a sponge. And this sponge is going to sit there and absorb that water until the sponge is full. Okay, and once the sponge is full, then if we get new interest market longs coming in, the longs will outweigh the shorts and price will move in the upward direction. So that is absorption, is what we already went over. The second type of divergence is called lack of market participation. Okay, lack of market participation. Now, how are we going to identify these two types of divergences? Now, it's very simple, okay? Let's go to Google, DuckDuckGo, divergences trading, okay? For the sake of simplicity, because a lot of people get confused over this, for the sake of simplicity, when we are looking for absorption, okay, we are looking for what typically is called a hidden divergence. Now, I know CVD is not an oscillator. It's not. It's a running average of the delta. But when we're looking at it, it looks very similar to a hidden divergence, because price is putting in higher lows and CVD continues to get lower, showing us that there are large limit orders absorbing those market shorts, okay? Now, lack of market participation looks very similar to a regular divergence, where price would be making a lower low and CVD would be making a higher low. Now, why is this the case? Let's talk about lack of participation. Let's talk about it. Lack of participation can be a sign that whatever direction the price is moving in, that the market is running out of steam. Okay, the market is running out of steam. So let me kind of draw an illustration for you. If we are in, let's say, an uptrend, okay, like this, right? All right, and price keeps making higher highs. And then on the bottom, we have our CVD. And the CVD is getting higher, it's getting higher, it's getting higher, and then all of a sudden it starts to get lower. What this is telling us is that there are not as many people interested in opening up new longs at this price. And that Bitcoin or whatever asset we're trading is becoming overbought, and there's not interest. There's no interest in the market for people to buy Bitcoin at this price. And so what that means is we're probably going to come down, because we can tell by the CVD that no one's interested in buying at this price, right? No one's interested in buying here. In fact, people are probably a little bit more interested in selling. Now, this type of divergence, the lack of market participation, we can't only just look at the CVD. And the reason why is because this in itself, right, could be a sign that although CVD is getting lower and the price continues to get higher, this could actually just be a sign that, you know, the delta and the price are not going together. And if large players decide to step in one way or another, the price could continue moving in the upward direction. Okay. Now, both of these divergence types usually play out very, very nicely if you have your confirmations. So we already went over what confirmations we want to look for when we are looking at absorption, right? For absorption, we want to see an increase in volume and delta. We want to see CVD doing the opposite of what the price is doing, and we want to see those trapped traders, okay? Now, let me find my notes here. For the lack of market participation, what we want to look for is we want to see CVD and price diverging as it would in a regular divergence, like a regular divergence on the RSI. That's how it's going to look. And then what we want to see is we want to see a decrease in open interest. A decrease in open interest. The reason is because if we have the CVD getting lower as price is getting higher, and we also see that no one's opening up trades, this is more confirmation to us that the move to the upside is very, very weak and will probably come back down. I also like to look for market cipher giving me confirmation of direction change. So if I see lack of participation on CVD, I like to get extra confirmation by looking at market cipher, or vice versa. Or vice versa, because I do use market cipher very, very much. The money flow is a very powerful signal. And so if everything's pointing in one direction, the lack of market participation can also be a very powerful signal. Now, some people don't trade this, and that's up to you whether or not you want to trade it or not. But let's take a look at some examples of regular, of lack of participation as well as absorption. So a great example of the absorption, which is the same type of CVD divergence we went over last time, was this right here. This right here. So we can see, in fact, I took this scalp. I took a scalp already here, and it's already closed out. Because when I'm scalping, I will close out 100% of my position for quick scalps. You can see that price made a higher low, and CVD right here made a lower low. We can connect this low to this low, and CVD was getting lower as the price was getting higher. This is showing us absorption. Why is it absorption? Because again, we can see a huge increase in volume as we're coming down, and delta. And then we can see that we have millions of shorts in this little area right here. And as soon as price comes above that area and traps these shorts, we can see that CVD is getting lower, showing us that although there's a lot of people stepping up to the market to short right here, there are large limit orders absorbing the shorts, acting as a sponge. And then once price moves up, then those shorts are trapped, and we can expect price will move to the upside. Also, we do want to see an increase of open interest when this happens. We want to see new traders stepping up to the market, because we have to understand, when there are new traders stepping up to the market and entering short here, they're basically they're setting themselves up to get trapped. They're setting themselves up to get trapped. Whenever you see a massive increase in volume, you should be thinking to yourself, there's a huge possibility these traders could get trapped. And then you wait and you say, okay, they could get trapped. Let me see what happens. And then you see price comes in and makes that higher low. And you see that over time, the delta goes from negative 34 million all the way down to negative 37 million. Okay, boom, that would be your entry. Let's see now if we can find some other examples of the absorption. I know we had one last night when we were down at this low here. Yeah, right here as well. We can see that price was making a higher low, right, from this point right here to this point right here. And we can see that the CVD was getting lower. Okay, CVD was getting lower. Again, what is this telling us? This is telling us we see a lot of shorts coming in. Look at the volume right here. Look at the volume. It's spiking up. We have like 200,000, 100,000, 200,000, 600,000, 600,000. All of a sudden, 4 million, 7 million, 13 million, 13 million. Look at all these shorts right here. In this candle right here, we know that there are 9 million more shorts than longs. right? 9 million more shorts than longs, which is telling us that there's like sorry guys, this is telling us that there's millions of shorts that are shorting right here. So if price comes above this level, we know that they're trapped. So we have an increase in open interest. CVD is getting lower. When we put in that higher low, all these shorts down here, okay, as soon as this purple candle closes, all the shorts right here are trapped, and then we get our move to the upside, right? So that is a great example of absorption. Let's see if we can find any other examples of absorption here. Let's try and see if we can find a short. Now for the short, we're looking for a lower high and a higher high on CVD. I know I showed some in the last session. This one would have been really hard to catch, so I'm not going to show that one. Here we go. Actually, no, that one would have been hard to catch as well. I want to find one that's very, very clear so that nobody's confused about what we are looking at. Okay, right here actually. This is a great example. Right here, we have a lower high, and CVD continues to get higher. CVD continues to get higher. So this one is a little bit not as clear because open interest is coming down greatly here. But we can see that all of a sudden we have a spike in volume. We can see we have 18 million volume, which is huge compared to the last few candles here. We have 11 million positive delta. And then we come up here, put in a lower high as CVD continues to get higher. This is telling us there are people trying to long here, but their longs are being absorbed by a limit short order. And so after we get confirmation of trapping these longs, we do get a move to the downside, and it's you know, it's not the biggest move in the world, but it is still something. Of course, the best trades are always going to be when you have the volume and the open interest increasing as well, because when that open interest is increasing, you have to think of open interest increasing as there are more traders potentially that will get trapped, and the more traders that are trapped there, the more substantial that move is going to be. So let me see here if I can find one more of absorption, and then we will go into the lack of market participation and look at some of those. So right here, this is one as well right here, and this one does not play out as nicely. So let's take a look at one that actually doesn't play out as nicely, right? We can see right here that we have price is coming down, and we have a lot of shorts opening up here. 14 million negative delta, which means there's 14 million more shorts than longs. We have millions of shorts. Then we come in and we put in a higher low with lower delta, and we could see what happens here is we do get our move to the upside, but then we kind of come back down, and eventually we do get another move to the upside, but it's nothing too substantial here, right? Nothing too substantial. And the reason why it's not so substantial is because we can see that we don't really have the market participation coming in to push the price higher, right? Even though these shorts do get trapped here, and we do have some increase in open interest at first, then when we put in that higher low, open interest kind of fades off. A lot of shorts closing their positions now, and longs not really doing much of anything. So, you know, they're not always going to play out. That's, you know, we should look for other confirmation along with this, and I'm going to get into that later in this session here. So, okay, was this... I can't tell here if the CVD actually got higher or lower. CVD got lower, so that's not one. But I think you guys get the idea. I think you guys get the idea. just want to see if we can find a good short where price made a higher low and price made a lower low and CVD made a higher low. I mean, this one was ever so slight. Absorption divergences do not happen as often. They do not happen as often, but okay, so here we go. Here's a good example of a short. Okay, we can see we have a big move to the upside right here, and then we have a lower high, and CVD's making now a higher high, and then we do get a move to the downside from there. All right, so let's talk about lack of market participation now. So lack of market participation is basically will appear as a regular divergence, okay? We saw here, down here, at least on the 5-minute time frame, it looked more like a hidden divergence, but lack of market participation is where price will be making higher highs, and yet the CVD will be making lower highs. So a great example of that would be right here, where we see price making a higher high, but we see CVD making a lower high, okay? Now, how do I like to trade these? I like to trade these using open interest as well. I want to see open interest coming down. The reason why is because open interest getting lower is a sign of a weak trend. And so, because it's telling us that there's really not the market participation necessary to continue pushing price up. Think about it. If nobody's longing, how is price going to keep going up? It's not. It's not going to, right? And we can see that from this divergence, we do get a pretty nice move to the downside here. And of course, we're just ranging right now, right? So we're not this is not swing trading, right? This is scalping, day trading here. But we could see from 12 o'clock on March 12th to 18 o'clock. So it's 6 hours that we would have been holding this trade here, and eventually we would have gotten some profit from it. But for lack of market participation, I like to see very, very clearly that the open interest is coming down. I like to see that the open interest is coming down. So let's take another look here, see if we can see anything else. I don't really see anything here. Price is getting higher, but so is CVD. Let's go back into let's go back in time. See if we can find something good here. I mean, here is some lack of participation right here, right? We could see price is getting higher, CVD is getting lower with a decrease in open interest. Then all of a sudden, what happens? We can see that, look what happens here. All of a sudden, we drop a little bit, right? And this is over the course of, 45 minutes to an hour that we do come down from the price of about 39,300 down to 38,875. So that's not a bad scalp at all. And as soon as we get that lack of market participation where there's nobody looking to drive the price up, all of a sudden we have a whole bunch of shorts step in and boom, the price drops, right? So that's what we'd be looking for. Let's see if we can find some longs. So this one right here, actually, this is actually a clear long signal, because we can see that, and it's a little bit hard to see on the 15-minute time frame. But as the price is getting lower, CVD is getting higher right here. It's actually really hard to see. This is March 4th at 17:30. Let's go into a lower time frame so we can see that better. March 4th at 17:30. Let's see, March 4th at 1730. Man, we have a long way back to go, guys. Well, while we're going there, let me tell you a story. So, a trader went into a bar and sat down at the stool, and the bartender was like, "Hey, how's it going?" And I'm secretly hoping that I can find it before. Okay, here we go. Right. So now we can see right here that as price is getting lower, it's actually very difficult to see, but the CVD is getting higher here as we're coming in to put in this low. And this would be even more clear on a lower time frame, but I'm not going to get to it. But we can see open interest is decreasing. Open interest is decreasing, and big time, right? Showing us that the downtrend is weak. It cannot be substantiated because there's no one still interested in shorting. And then from that time, we get a move to the upside, and we do come from the price of 38,560 up to 39,140. So a $600 move right there. That is not a bad scalp at all. Let's see if we can find any other moves here. This is price getting higher, CVD getting lower. This one here, we can see open interest is increasing slightly, but even still, we do get a move to the downside over the course of the next 15 minutes, where price comes from 41.8 down to 41.2. So again, like a $500-$600 move right there, just because we have price coming higher, CVD getting lower. There's not really much interest in people buying this here. And then, you know, if you really kept your stop loss above that last high, you could have stayed in this trade. Or if we take a look again, we can see price technically comes to make a higher high right here. As CVD continues to get lower, a decrease of open interest starts to come in here, and then we do get a more substantial move to the downside. Let me see if I can find any more here. This is not a divergence. And so you do have to be patient to wait for these if you're going to be trading these. Now, personally for me, when I'm looking for a lack of market participation, I like to see Market Cipher also giving me confirmation. That's what I like to see the most, because that will give me an added layer of confluence that I'm looking for. So yeah, that's good to see. Now let's see what's happening right now. Actually, is there any kind of divergence here? Price is making a lower high, CVD is making a higher high into the VWAP. So, and we have an increase in open interest right here. So this actually could be, if we see we have an increase in volume, this could be absorption right here into the VWAP, because we have the potential now of all these longs getting trapped. We have the potential of 12 million longs getting trapped into that VWAP right there, where we could come down from here. So this would be an example of a absorption, right? People are longing into resistance, open interest is increasing, positive delta, and CVD is putting in a higher high as price is putting in a lower high right here. And so we would have to wait for confirmation. Confirmation being we want to see these longs up here being trapped, and then we can come down. We can also turn on net longs and net shorts and see that right now we have a lot of new longs coming in. We have very, very few shorts coming in at the moment. And so once these traders are trapped right here, what we want to see is we want to see now the shorts coming in. We want to see the shorts coming in, preferably we can tell where most of these longs are, right? We can tell that if we can come below, we have 6 million up here, almost 5, almost 10. We have like 15 million longs. We will have 16, 17, 18, 19, 20 million longs that will be trapped if the price comes down below 38,725. So if price comes down below 38,725, that would be confirmation of trapped traders. We would then want to see shorts starting to come in, and then you could enter short. You could put your stop loss above that VWAP and you know, take it back down. So we could actually see pretty interestingly here that we had a good opportunity to take a long from the bottom right here when price was getting higher, yet CVD was getting lower, right in here where we saw all these trapped traders. And now we could see the opposite, where we have increased positive delta and we come up into a resistance, increase of open interest, and now actually we can see that, you know, it depends on how aggressive you want to be as well, but we do have, just from this candle alone, we have, you know, 1.62 million. So, you know, let's say we have 4 million plus 4, that's 8 million longs that are already trapped, plus another million, so 9 million. We have about 9 million trapped shorts right here already. And now we can already see that the longs are starting to close their positions. We do see some shorts starting to enter into the market here. And so this is actually a good sign that the price now is going to get a move back to the downside, right? A good sign that the price is going to move back to the downside. Yes, so those are the two types of divergences. As I was saying before, I like to see CVD for lack of participation, CVD and price diverging like a regular divergence that you would see on the RSI. I'd like to see the decrease in open interest, and I like to see market cipher confirming direction change. For the absorption, this is the type of divergence we went over in the last session. I'd like to see an increase of open interest, increase in volume and delta, and then the trapped traders, the more the better. My two favorite time frames for doing this are the 5-minute and the 15-minute. The 5-minute and the 15-minute. Because if you go higher than that, sometimes it may be good for swing trading, but you're not going to get that immediate result. And then secondly, the higher the time frame, the much longer it takes for these things to play out, right? It takes much longer for these to play out on a higher time frame. So these are the two types of CVD divergences. I highly recommend you incorporate this into your trading because it will give you a lot of extra confidence when entering a trade, because this is literally showing you what is happening live in the market. If you combine this with the market cipher money flow and the momentum waves, you can really have some really nice confidence when entering trades. This can help keep you out of some bad trades and even help get you into some good trades that you might have otherwise missed. All right, y'all, that's it for this session, and I'll see you in the next one.